This Thursday, 15 August 2019, hearing officer meeting is called to order. Good morning, I am Regional Planning Staff Member Gina Natoli. I will be the hearing officer on all agenda items. I'd like to go through some administrative items first. Please turn off or silence all electronic communication devices. If you'd like to follow along with today's proceedings, there are agendas available in the back of the room. There are established time limits for testimony on hearing officer agenda items. Petitioners have up to 10 minutes for the initial presentation and up to 5 minutes for a rebuttal period. Respondents would have 10 minutes. All others are allowed 2 minutes each, and there is no ceding of time. Anyone wishing to testify today on any agenda item, and that includes the public comment period, must fill out a speaker card and submit it to staff in the back of the room. There is an audio and video recording being made of today's proceedings and will be available within 15 working days. Is anyone aware of anyone here today who may need translation services? Seeing none, I will move on. The general procedures for today's agenda items is as follows. First, staff will make a brief presentation, then the petitioner will speak, respondents will then speak, followed by members of the public, and if necessary, I will then hear rebuttals by the petitioner. Final decisions made by hearing officers on landlord petitions which do not assess an administrative penalty, and final decisions on all tenant petitions are final and are not subject to further appeal at the county. If you intend to testify today on any agenda item, and again, that includes the public comment period, I'm going to ask that you please stand at this time to be sworn in. Even if you're not sure you're going to speak, please go ahead and stand. Being sworn in does not obligate you to speak. Please raise your right hand. Do you solemnly swear to tell the truth, the whole truth, and nothing but the truth? Thank you. Please be seated. The agenda items will be taken in order today. We're moving on to Part 2, Public Hearings. Item 2, I believe, Ms. Lewis, you're going to be doing a joint presentation for items 2 through 5, correct? All right, thank you. Ms. Lewis, please proceed.
Okay, thank you. So this will be for the interim rent stabilization ordinance petitions for relief from moratorium, and it is for the following RSQs. RSQ 19-04419, RSQ 19-04420, RSQ 19-04421, RSQ 19-04422. So the petitioner for all of these petitions is Lonzell Branch, who's the landlord, and the respondents are the subject property tenants, which I'll go over.
Ms. Lewis, I'm sorry, I need to interrupt you. I'm sorry, I forgot to announce that there was also a still photographer taking photos today that apparently the Department of Consumer and Business Affairs would like the photos for, I don't know, their annual report or something like that. So I just needed to make sure that I announced that there is a still photographer in the room, in addition to the audio and video recording being made of today's proceedings. I apologize for the oversight. Please proceed, Ms. Lewis. I'm sorry for the interruption.
No problem. Thank you. The petitions were filed on March 27, 2019. As I previously stated, these are all petitions for relief from moratorium. So the landlord is requesting to increase rental income in excess of the allowable limit, which is currently 3%, which has been established by the interim rent stabilization ordinance. These are the subject property addresses. 10200 through 02, South Wilton Place, Los Angeles, California, 90047. 2131 through 33, West 104th Street, also in Los Angeles, California, 90047. There's also 10628 through 30, Haas Avenue, also in Los Angeles, California, 90047. And lastly is 10003 through 05, South Gramercy Place, also in Los Angeles, California, 90047. Each of these properties are located in the unincorporated area of West Athens in LA County, and they are residential dwellings on properties with 2 or more units. RSQ 1900419 was built in 1947, as well as RSQ 1904420 and RSQ 1904421. RSQ 1904422 was built in 1948. The petitioner returned the proof of service forms to DCBA on April 25, 2019, declaring that copies of the petitions were sent to the respondents on April 25, 2019. And DCBA mailed their original notice of hearing on May 17, 2019. So the interim rent stabilization ordinance and implementing rules and regulations define a fair return as ensuring a landlord may maintain the value of the net operating income earned from the property prior to the regulation of rents under the IRSO and continue those earnings during the pendency of the rent stabilization ordinance. Net operating income is defined as gross income less operating expenses, and maintaining the value of the net operating income is achieved by ensuring net operating income increases no less than any increase in the consumer price index for the Los Angeles area, as reported monthly by the U.S. Department of Labor, Bureau of Labor Statistics. So to maintain a net operating income, the county compares a landlord's net operating income prior to the interim rent stabilization ordinance and at the time the landlord petitions the county for a rent increase to ensure that the net operating income received when the petition is submitted has increased in value to the change in CPI. To review and determine the maintenance of the net operating income between the base year and the petition year, the petitioner must provide substantive documentation related to the reported income and expenses. So here I'll go over some of the documentation that's been provided to the Department of Consumer and Business Affairs relative to the operating expenses that have been reported by the petitioner. So the petitioner reports the following operating expenses. Those are property taxes, property insurance, maintenance and repairs, plumbing, gardening, pest control, and water. And these are expenses that the petitioner has carried between the base year and the petition year. The Department of Consumer and Business Affairs received the following expense-related documentation from the petitioner. That's utility bills specific to the water. They also provided bank statements, council checks, as well as maintenance invoices for any of the work that had been done on the property. At this point, I'm going to go ahead and talk specifically about each of the petitions. So this is for RSQ 1904419. So here are some of the key issues. The 2 rental units on the property are currently rented out for a reported total of $2,472 monthly, and the petitioner is requesting a monthly increase in rent of $328 or 13.27%. And that's in addition to the 3% allowable increase. The petitioner initially issued rent increases to the tenants in October 2018 that were above 3%, and found out about the interim rent stabilization ordinance and is currently returning any overpayments that occurred. Just for everyone's information, if a tenant has paid in excess of the allowable limit, then the landlord is responsible for returning any overpayments to the tenants, and that can be done in a lump sum or across 6 months. Just to note, the petitioner has reported that he will be increasing rent by 3% in October 2019, which makes up 12 months since the 3% increase was issued, and he's already provided notices to the tenants for that. So please forgive me, this chart is pretty small for the people who are in the audience, so I apologize about that, but I will go over some of the numbers in it. just so that you're aware of what's included. So as I stated, I should mention that this chart is the petitioner's reported income and expenses versus what the DCBA staff was able to substantiate and come up with as the income and the expenses. So as I stated before, the following expenses were reported by the petitioner: property taxes, property insurance, maintenance and repairs, plumbing, gardening, pest control, and water. In 2018, which is the base year, and that goes from September 2017 through August 2018, the petitioner's reported net operating income was $23,911. I can't get my numbers. Sorry. $23,911.02. I apologize about that. In 2019, which is the petition year from September 2018 through August 2019, the petitioner reports a net operating income of $25,855.21. So it appears the increase in net operating income between the base year and the petition year is due to a decrease in operating expenses and an increase in the total rental income between the base year and the petition year. So I should mention here that as I previously mentioned, the landlord issued the 3% rent increases back in October, which in turn increased the total rental income for the property, as well as the reported operating expenses decreased from $4,888.98 to $3,736.79. So again, making it appear that there is an increase in the net operating income. And based on the information provided, like I said, the income appears to have increased. And that evidence included utility bills, bank statements, council checks, maintenance invoices that were all provided to us by the petitioner. So the Department of Consumer and Business Affairs, our numbers differ a little bit based on the documentation that was provided to our department. So for the base year, the Department of Consumer and Business Affairs calculates a net operating income of $24,186.19. And in the petition year, we calculated a net operating income of $24,692.93. So the same expenses were reported to us: the property taxes, property insurance, maintenance and repairs, and utilities. One thing that I want to point out here is that the net operating income did not include mortgage costs, as they're not considered to be an eligible expense for the purposes of determining a fair return in the implementation of the interim rent stabilization ordinance. So once we calculated the net operating income, we went ahead and adjusted that for inflation using CPI, and the difference between what CPI was in the month that was immediately available in the petition year, which was June 2018, it was 274.380. And then we used the annual average for the year of 2018 when the interim rent stabilization went into effect, which was 265.962. We calculated a 3.17% difference, and we went ahead and adjusted the net operating income against the 3.17% increase and CPI, change in CPI, which brought us to $259.96 for the funds that were necessary to maintain the net operating income. So we calculated that out by subtracting the adjusted net operating income from the raw net operating income. So what that was without an adjustment for an inflation. Once we calculated that out, it was determined that the landlord was actually operating at a loss of $259.96. So I'll go ahead and address that here as well. So to make the petitioner whole in that instance, we would divide out the $259.96 by the 12 months and then by the amount of units at the property. This property has 2 units, and so that would be about a $10.83 loss per unit for the petitioner. And rent is currently set at $1,236 monthly for both of those units. And I'll go over that recommended increase a little bit later in my presentation. Okay. So now I'll address RSQ 19-04420. So the 2 rental units on the property are currently rented out for a reported total of $2,416.80 monthly. And the petitioner is requesting an increase of $168.20, which is 6.99%, more than the additional 3% that's allowed by the interim rent stabilization ordinance. Just like with the last property, the petitioner initially issued rent increases to the tenants in October 2018 that were above 3%. So he's currently returning any overpayments that occurred. And then he's also provided notice to the tenants that a 3% rent increase will take place in October 2019. So again, please forgive me for the chart. It's small, but again, I'll go over the numbers. So the following expenses were reported by the petitioner: property taxes, property insurance, maintenance and repairs, plumbing, gardening, pest control, and water. For the base year, again, September 2017 through August 2018, the petitioner has a net operating income of $21,862.08, again, as reported by the petitioner. And in the petition year, which is September 2018 through August 2019, there's a net operating income reported by the petitioner of $24,447.84. So the increase in net operating income between the base year and petition year is due to a decrease in the operating expenses, as well as an increase in the total rental income. So the landlord had about $4,357.92 reported in the base year of operating expenses. Those went down by $20 and then it went to $4,321.96. The same type of materials were provided to us to demonstrate this, which included the utility bills for the water, bank statements, council checks, and maintenance invoices. For DCBA, so what we calculated based on the documentation that was provided and what we were able to substantiate, in the base year, we see a net operating income of $20,984.02. And in the petition year, we see a net operating income of $23,355.34. We arrived at that number with consideration to the petitioner's expenses related to the property taxes, insurance, maintenance, and repairs, along with the utilities. Again, mortgage costs are not considered to be an eligible expense for the purposes of the interim rent stabilization ordinance. So, just as I pointed out, the increase in the net operating income is due to an increase in the total rental income between the base year along with the operating expenses. And one thing that I want to mention again regarding the rental income is that we did adjust that for the 3% increase that has been issued. Another thing that I want to point out regarding this is the tenant initially reported about $1,000 less in operating expenses to us, but we were able to look at the property tax statement and determine that the landlord, the petitioner, actually paid more property taxes than what had been reported to us. So we did make sure to substantiate those and provide those numbers accordingly. So we did the same thing as we did with the last petition and went ahead and calculated the adjusted net operating income, which is found by multiplying the base year net operating income against the change in CPI, which again is the same for this petition, 3.17%. And we're able to determine that the adjusted net operating income that DCBA was able to substantiate was $21,649.21. After adjusting that and subtracting that number from the raw net operating income, we determined that the landlord had $1,706.13 additional funds necessary to maintain the net operating income. So that's the adjusted net operating income less the petition year net operating income. Now I will address RSQ 19-04421. So the 2 rental units on the property are currently rented out for a reported total of $2,240.25 monthly, and the petitioner is requesting a monthly increase of $334.75, which is an additional 14.94% increase in addition to the interim 3% increase allowed by the interim rent stabilization ordinance. As with the other properties, the petitioner initially issued rent increases to the tenants in October 2018 above the 3% and is currently returning any overpayments that have occurred. And just the same as the other property, the petitioner will be increasing rent by 3% in October 2019 and has already issued notice to the tenants. So I'll go over the calculations that we found for this property. The same expenses were reported, which include the property taxes, property insurance, maintenance and repairs, plumbing, gardening, pest control, and water. For this property, the petitioner reports a net operating income in the base year of $21,899.70 and a net operating income in the petition year of $21,746.64. So it appeared to decrease between the net operating income between the base year and the petition year is due to an increase in operating expenses between the 2 years. The landlord provided the same evidence, which is utility bills, bank statements, canceled checks, and maintenance invoices provided by the petitioner. For DCBA's calculation of this, we determined that the petitioner had a net operating income of $21,285.28 in the base year, and in the petition year, a net operating income of $21,118.46. We used the same expenses that were reported. Again, the property taxes, insurance, maintenance and repairs, and utilities for the property. Same thing, we do not consider mortgage, and so that was not calculated here. So once we calculated out the net operating income, or I'm sorry, the gross income as well as the operating expenses to get to the net operating income, we adjusted that for inflation, which was 3.17%, or sorry, against the change in CPI, which provided us with an adjusted net operating income for DCBA substantiated of $21,960.02. Once we determined what the adjusted net operating income was, we wanted to calculate what the funds were that were necessary to maintain the net operating income, which is the adjusted net operating income less the petition year net operating income, and determined that the petitioner would need $841.56 to become whole. And I'll address that as well. So the $841.56 is divided out by the 12 months, which gives us $70.13, which we also divide out by the amount of units at the property. This property has 2 units as well, so about $35.07 is what the landlord is operating, is lacking to operate the property. And that's per unit. Okay, so now I will address RSQ 19-04422. So again, the 2 rental units on the property are currently rented out for a reported total of $1,648 monthly. The petitioner is requesting a monthly increase of $352, which is 21.36% more than the 3% allowed by the ordinance. Just the same as the other properties we discussed, the petitioner issued rent increases above 3% in October 2018 and is currently returning overpayments that occurred for those units. And the same thing, he will be increasing rent by 3% in October 2019 and has already provided the tenants with a notice of increase. So here again, I'll go over the base year and petition year calculations as reported by the petitioner and as substantiated by DCBA. Same exact expenses were reported: the property taxes, property insurance, maintenance and repairs, plumbing, gardening, pest control, and water. In the petition year, or I'm sorry, the base year, the landlord has a reported net operating income of $14,802.91. And in the petition year, the landlord reports a net operating income of $15,689.68. Again, we see an increase in the net operating income that's been reported, which is apparently due to a decrease in the operating expenses, as well as an increase in the total rental income. And the landlord provided the same documents to substantiate the claims, which includes utility bills for the water, bank statements, council checks, and maintenance invoices. DCBA has calculated a reported net operating income in the base year of $13,696.83, and in the petition year of $14,519.38. We arrived at an increase in the net operating income for the same reasons: a decrease in the operating expenses along with an increase in the total rental income. So again, we calculated out the net operating income and adjusted that for using the change in CPI, which brought us to an adjusted net operating income of $14,131.02, and then determined that the landlord has about $388.36 in additional funds to maintain the net operating income once we determine what the adjusted net operating income was, less the petition year net operating income. So at this time, staff is recommending approval of the following interim rent stabilization ordinance petitions for relief from moratorium. So that's for case number RSQ19-04419 and case number RSQ19-04421. And if I can go back, I'll just address what we're recommending. I'll start from the bottom, RSQ19-04421. So as previously stated, we are looking at these numbers to determine whether or not the landlord is maintaining the net operating income. And should the landlord not be maintaining the net operating income, we're able to calculate out what that number looks like. And as I previously mentioned, we determined that the landlord needs about $841.56 in additional funds in order to maintain that net operating income. Over 12 months and adjusted for the units, that's about $35.07, which would change the rent for the units to the following. So the recommendation would be that rent at the unit 10628 South House Avenue, Los Angeles, California, would increase of $35.07 monthly to $1,219 and I can't get my numbers out, sorry, $1,219.57. So that would constitute an additional 2.9% rent increase above the allowable limit. For rent at the unit located at 10630 South House Avenue, Los Angeles, California, 90047, The recommended increase would be the same of $35.07, which would bring rent to $1,090.82, which constitutes an additional 3.32% increase above the allowable limit based on the calculations and the numbers provided to us. Okay, for RSQ 19044419, it was determined that the operating net operating income would need to be made whole by an additional $259.96. That number was divided out by the 12 months within a year, which would be $21.60, which is also divided out by the amount of units at the property, which is 2 units, and then that would be $10.83. Both of the units on the property have rent that's currently set at $1,236 monthly. So adding an additional $10.83 monthly would bring their rent up to $1,246.83, which is an additional 0.88 increase above the allowable limit. So for the remaining petitions, staff is recommending a denial of the petitions, and that's for case number RSQ 19044420 and RSQ 19044422. As we previously stated, in both of these instances, the landlord is operating above the net operating income and thus should not be entitled to the additional 3%, I'm sorry, an increase above the allowable 3%. Thank you.
Thank you, Ms. Lewis. Let me get into my questions. First, how do you account in your calculations for the overpayment as rental income that the landlord is now paying back? So the landlord took in more money than they should have each month. That's now reported as income on these charts. Now that money is being returned to the tenants, if it hasn't already been returned, and it should have already been returned. Isn't that inflating, isn't that inflating the income that the landlord receives?
Okay, so I want to make sure I understand your question correctly. Are you asking in the calculations that we provided that listed the gross income between the 2 years, if it's with consideration to the overpayments that have been collected?
Yes.
No, they do not. It's not considered because the landlord's returning the overpayments back to the tenants. So the amounts that were calculated in the gross income for all of the properties are what the amounts are set at without the additional amount above the 3%, unless it was in the petition year.
So you, for argument's sake, let's say the landlord increased rents 10%. Your calculation here only includes a 3% increase because the landlord is having to return 7%.
Correct.
All right, thank you. Do you know if the returns are complete, the returns of overpayment are complete on any of the properties?
The landlord states that he's still doing the returns of the overpayments.
All right, and on each of the petitions, 3 of the petitions, there's a substantial difference in net operating expenses as reported. And I'm wondering if you know for these what the primary difference would be. So for instance, on 04419, what would be the primary difference between the DCBA petition year operating expenses and the petitioner's petition year operating expenses? It's up to $1,300. So otherwise, the expenses submitted seem pretty reasonable, pretty typical.
The primary difference in expenses for the properties are related to the property taxes. Again, the landlord was reporting less property taxes than actually paid, which we were able to go ahead and figure out by getting the property tax statements. Also, the plumbing. Some of the plumbing was reported to DCBA, but DCBA was unable to substantiate that just because it was based on bank statements, but there may have not have been like backed up council checks that showed us this that was related to the property, or it was just only written in on the bank statements, and we had no invoices to substantiate it.
You're saying the primary difference was property taxes, that you were able to find more property tax payments.
Correct. So the petitioner initially provided documentation to us showing payments for property taxes that were only mid-year payments rather than both of the payments that took place in the year. So we were able to see that the petitioner actually paid more, sometime, or in most cases double, than what was actually reported.
All right, thank you. I don't have any other questions for you at this time. I'm going to open the public hearing for all items. So I'm opening the public hearing for item 2, case RSQ 19-04419, item 3, RSQ 19-04420, RSQ 19-04421, and item 5, RSQ 19-04422. At this time, I will call the petitioner. First two speakers, Lonzel Branch and Dwayne Branch. Good morning, gentlemen. Please come on down and take a seat at the testifiers table, sir. Sir?
Oh,
right on the table? Yes, sir. There's a timer on the table in front of you. It shows 10 minutes. You have 10 minutes for your initial presentation. Whomever wants to start speaking, you're more than welcome to do that. When your time starts, the green light will come on. When you have 30 seconds left, the yellow light will come on. So when you see that yellow light, just try and wrap up your comments. And when the red light comes on, your time has expired. And please, I just ask that you state your name, and you only need to state your name. Just state your name for the record before you begin. Thank you, sir.
The name is Lonzel Branch. I'm the owner, and this is my son, Dwayne, who is the manager. I have also with me my wife of 55 years, who is also the co-owner. It's hard to agree or disagree with what's been presented because, number one, it was done so fast. Plus, I had no knowledge of the content. We could not see most of the charts from where I sit. But my time is running, so I'd better get started. First of all, let's start with the 1020 South Wilton Place. That's the petition there. Let's start with the description of the property. It's a 2-bedroom, 1 bath, 900 square foot with wash and dry hookup, single car garage. It's a duplex, and it has air conditioning. My petition and desire is that I be returned to the October 1 rate of $1,400 per month. If you look at the Monica Lewis, who came, she's been there 11 years, and that's she started out at $1,200, and after 11 and a half years, I increased by $200. I don't think that's an absurd increase. Matter of fact, it's less than 3% per year. Matter of fact, if you look at all of these units and look at the history of my rental increases, none of them are more than 3% per year. The second petition, which is April Maxwell, she's also in the Wilton, 10202 Wilton, and there are two. She's been there 6 or 7 years, and she had a $200 increase, but that's that's once in 6 years. The next was Aisha Bowen, which is a Section 8 participant. And by the way, those rental increases were put out in the month of July. They became effective in October. I allowed adequate time for the tenants to adjust to the increase. Even though they had not paid for 7 to 11 years, I gave them plenty of time to adjust to the increase. I had no complaints. In the interest of time, I'll go to Mr. Abdul, who's on 10630 South Haas. Mr. Abdul was there when I bought the place 41 years ago. He's still a tenant, and his rent is less than $1,100. As a matter of fact, it's $1,025. Now, this is a case where the tenant had kids going to school. I did not increase his rent in order to help him out and while his kids went through school and through college. Once they graduated from college, I gave him a letter that says, now that your children are out of school, I will be increasing your rent $100 per year until we get to this rate. However, in 41 years, he's gone from $225 to $1,025. Now, to deny increase on that, I think is absurd. Finally, go to the Gramercy place, Sarah Harrell, and there's nowhere in this county you can find rent other than through me for $800 a month. 2-bedroom, same as other units. They're within the block radius. $800, and to disallow me to increase that from $800 to $1,000, I think does me as a landlord injustice. I don't think I'm being treated fairly when I'm anywhere I've checked in that general area. There's no rents under $1,600. I'm only asking for $1,400. I don't increase my rates 3% every year, as you can see. Matter of fact, I have one of my tenants here, and if she cares to speak, she can. There again, that's LaTanya Washington. She's on 2133 West 104th Street. I've had her since she was a child. I had a mother. She's a child. She came in. She got married. She left. Came back with children. She had a voucher, but the voucher it's a 2-bedroom, and she needed a 3-bedroom. But she accepted the 2-bedroom because her mother asked me to take her in. And she has had 5 children. Most of them have gone through school, graduated, and her rent was $1,060. And she's been there 22 years. Any questions?
Mr. Branch, I do have a question for you. It appears that the DCBA numbers are based on information that you provided. Do you have anything else to provide that would show an increase in your expenses at all?
Well, what DCA, as well as the rent ordinance, is doing, they're giving everybody a broad brush, as if everybody is jumping rents. I have not done that. Now, those expenses do not show putting on new roofs, repairing balconies, major plumbing jobs that do occur. In fact, a roof put on 2 years ago was over $5,000. A balcony repaired last year was over $5,000. It doesn't show anything with regard to maintenance for this. You look at my units, they are painted. There's no expense here for painting. You can't take the monthly utilities and other rents and decide that's what the owner has, the totality of the owner's expense.
The way the ordinance is written, Mr. Branch, it's your expenses in the base year, which is 2018, and then your expenses in the petition year, whichever year you file your petition. And so if you had balcony expenses of $5,000 in 2018, that certainly should have been reported to DCBA. Do you believe you have more expenses in 2018?
Well, they went in 2018, perhaps 2017. But my point is, regardless of what area or what time frame that the ordinance is covering, the ordinance also leaves you the opportunity to correct that kind of a wrong.
All right,
in fact, I've been paying back the rent, the overpaid rent over the 3% at $200 per unit per month from the month of May through August.
May through
However, that I feel that I'm being wronged by this ordinance into the tune of $2,500 a month or $10,000 over the last 4 months.
Mr. Branch, when do you believe that you will be able to have all of the overpayments returned to your tenants?
Right now, I'm scheduled to give $200 in September and the balance of most of them around $160 in the month of September.
So would that be everyone paid back by the end of September? All right. All right, thank you. And Mr. Dwayne Branch, do you have anything to add?
Primarily what I wanted to state is, as he's described, he's been very generous, and he has had an exceptional attitude with trying to extend to the tenants and being flexible, whether it's an extension on when to pay the rent or an extension on making repairs and not going up in the rent. One of the things I wanted to state is, in 1991, I lived in Van Nuys, got married. 1 bedroom loft was $625. He had tenants 30 years later, they're paying $800 for a 2-bedroom apartment. When I came back, I moved back into Hawthorne, 2002. I was looking for a 1-bedroom or a 2-bedroom. I'm looking around, I find $750, $800 for a 1-bedroom. This is in 2002. We're talking about an additional 14, 15 years later, and the differential is $50. We all know inflationary pressures per year have exceeded that. You can look at the cost of gas, cost of groceries, everything has gone up. And yet, he's managed not to gouge his renters. Primarily, his role is to, yes, make money, but he's also provided his tenants with a stable environment. The degree to which the tenants have stayed there for multiple years testifies to that stability. If he's going up on a regular basis, incrementally, to a point where it gets too expensive, you would expect that a certain percentage of those tenants would have moved out. And yet, when you look each property, you will see tenants that have been there in excess of 10, 15, 20, 35, 40 years. which is an exceptional testimony to his reasonableness.
I need for you to wrap up, Mr.
Okay.
Branch.
I understand that there are individuals that are gouging and taking advantage of people, especially with the new stadium that's come in. I've heard of people paying double. But he is not one of these individuals. And to treat him as if he is to the detriment of those tenants. Because in 2008, when the Great Recession hit, they benefited by him not going up on the rents.
Thank you, Mr. Branch. Thank you both very much. I'm going to be calling the public speakers now. You may take your seats. I have the email from Hishams Abdul Mumin that I have read. At this time, I'll call the next two speakers. I have 3 more speaker cards. The next 2 speakers, please, are Monica Lewis and LaTanya Washington. That's all right if you've changed your mind. That's fine. And you are, ma'am? Ms. Washington, all right. Oh, thank you for reminding me. Apparently, you came in a little later, ma'am. You have not been sworn in, is that correct?
Right.
Okay, great. Could I just ask that you remain standing? Let me pull out my notes and swear you in. If I can find them. Here we go. Please raise your right hand. Do you solemnly swear to tell the truth, the whole truth, and nothing but the truth?
Yes.
Thank you. Please be seated. I haven't given the oath enough to remember it by heart. All right, then let me go ahead and call the next speaker. I have Mr. Christopher Redd. All right. When you come down, sir, just go ahead and take a seat. Ms. Lewis, you may begin.
All right. My name is Monica. The purpose for my attending today, I'm not opposing the increase. I just wanted to share that I believe that Mr. Branch has been extremely generous. And when I divide up the number of years I've been there and what I pay for rent and what he's asked for an increase, it kind of comes out to, I believe, about $18 a month over the last 11 years. So I'm not opposed. I just wanted to make that statement on his behalf that to piggyback on what the manager said, Dwayne Branch, that he is not gouging. Recently, I saw an apartment renting in our neighborhood right across the street, and it was going for $2,200. So I'm extremely grateful to where Mr. Branch has kept the rent. And it's been beneficial to me in, losing my spouse, and then also in taking care of my mom, and also losing her. So being able to, my rent to be stable and maintained has been a benefit. And so I just wanted to speak on his character and on his behalf. That's it.
Thank you, Ms. Lewis. Mr. Redd?
Only had one thing. It was a little clarification. He stated that my mom's rent was 10. Sorry, back up a little bit. Can you hear me?
Just a little bit, yes,
Okay,
thank
perfect.
you.
He stated my mom's rent was $1,060, and I just want to say initially it wasn't that price. It was increased over the years, and he started increasing the rent in 2013. And this is a letter that he sent my mom in the mail, and he increased it $100 a month all the way until the most recent increase. So that's something I just want to offer as clarification. I didn't really hear him touch on that. I just heard him say that it was $1,060, but he didn't talk about the prior increases like he did with the other units.
So, Mr. Redd, are you telling me that over the course of 9 months, just for argument's sake, over the course of 9 months, rent increased $900 because it was...
every year.
Okay. Because you said $100 a month, and I...
Oh, sorry, annually, sorry.
All right, $100 annually. Thank you, Mr. Redd. Did you have anything else to add?
That's it.
All right, thank you very much. Mr. Branch and Mr. Branch, you have up to 5 minutes for a rebuttal if you would like any additional statement like to make any additional statement?
Just correct what he's, this wrong? Just correct what he said. Basically, what his rent, the rents were low. And his mother had the 5 children. And what I did for a short period there was rather than give a lump sum increase to get the rents up, because when they were small, I kept the rents down. I've known their mother since mid-70s. And when she moved in, her mother gave me a word that if she didn't pay, she would pay. But I've kept the rents low. Her mother has never had to pay. She's been faithful in paying, and I've been flexible. So yes, I did for a few years there. I gave $100 a year increase, but it ended up at $1,060. It's been there for several years. But that was only a temporary thing to get the rents up.
Thank you very much, Mr. Branch. Thank you. Ms. Lewis, do you have any comments?
We just wanted to say that if any of the rent increases are approved, we recommend that they go into effect when a proper written notice is issued to the tenants.
So how would that work? If Mr. Branch could raise the rent in October of this year, another 3%, or 3%. This is August 15th. What is considered proper notice?
I'll have Dana speak to that.
Ms. Pratt.
Thank you. So under rent increases are covered under California Civil Code Section 827. So it's, as long as that increase is that increases in writing and in advance, then that should be fine. We cannot advise or provide legal advice to the landlord petitioner or to the tenant respondents, but all of that information is available. We can also have staff speak with the landlord petitioner about written notices following the hearing.
So my question would be, could the landlord issue a notice today or tomorrow? It says your rent is increasing $10.83 a month starting September 1st.
Once given, if there is an approval of their petition, once they have that authorization, then they should be able to issue I believe that they should be able to issue a written notice to that effect.
All right, so they wouldn't be restricted to, you must give 30-day notice?
There are 30 or 60-day notices depending upon the amount of that increase. It also depends on how much the rent has been increased in the previous 12 months.
All right. Okay, thank you for that. We're going to have a discussion about how this will work.
Okay, thank you.
Thank you. Right, the interim rent stabilization ordinance states that the petitioner has the burden of proving by a preponderance of the evidence that because of implementation of the ordinance that the landlord is unable to obtain a fair and reasonable return. The petition is based on numbers. It's based on income and expenses. It's unfortunately, in some instances, not based on the goodwill and the good character, or I should say, the will or character of a landlord or a property owner. And there are certainly instances, I'm sure, and it sounds like it's true in this case, where a landlord has not only been reasonable, but has been extraordinarily reasonable over the years. However, without a numerical or legal justification for not having raised rents. For instance, a unit was subject to Section 8 housing, and now it's a market value can be charged. That's something different, where the rent was artificially kept low for a unit because of some legal obligation. Unfortunately, I'm looking at the documents submitted, and the numbers show that for item 2, which would be the units at 10,200 and 10,202 South Wilton, and the units covered under item 4 at 10,628 and 10,630 Haas Avenue, the numbers show that the petitioner is not making the adjusted net operating income and is due an increase. The numbers do not show that for item 3, which would be the units at 2131 and 2133 West 104th, and item 5, the units at 10,003 and 10,005 South Gramercy Place. I recognize that the area where the units are is subject to some external pressure for rental increases. And while I will say that the presentation given by the branches today has been the most professional presentation that I have experienced here as a hearing officer for Department of Consumer and Business Affairs, I am restricted by the interim rent stabilization ordinance in what I can do. I have to look at the numbers, and the numbers justify a small increase for Wilton Place and Haas Avenue, and do not justify an increase for West 104th or Gramercy Place. With that, I am closing the public hearing for item 2, item 3, item 4, and item 5. And given the evidence presented, I affirm the petition for relief from moratorium for case RSQ 19-04419. The petitioner may increase rents on the 2 units by $10.83 per month each, to a total of $1,246.83 each, hopefully effective September 2019. I don't know how this is going to work, though, because, and I don't know if Ms. Pratt or Ms. Lewis wants to come up and discuss the time period on this. If he has to give, the landlord has to give a 30-day notice, in effect, the rents increase does not go into effect until October. He's going to be able to increase the rents 3% in October. So when does this increase factor into Mr. Branch's calculations for the 3% increase that he can impose in October? If he can increase to $1,246.83, what can he start charging in October? Can he start charging 3% above what's being charged today? Or could he charge 3% over $1,246.83?
We would have to do that calculation, but the increase in excess of the 3% would depend upon when the notice is served. So it's hard to give an exact answer on that, because we won't always know the timing in which a particular landlord serves a notice, but we can figure that out.
Right, so for item 2 and item 4, the properties at Wilton Place and Haas Avenue, where I'm going to find that the evidence substantiates the petition for relief from moratorium, on those, a determination will be made depending on the petitioner's notice as to whether the rent increase in October will be 3% over today's rent or 3% over today plus what I would allow to be increased to today.
Yes, so we will get clarification on that.
All right, that would be appreciated, because that would be my hope, is that if I'm approving a rental increase today, say on the Wilton Place properties to $1,246.83 each per month, that the October increase could be 3% over that. But I understand that's something that's regulated by state law. State law preempts me in that. I can't direct it. So hopefully state law rules in that manner. But as long as staff will work with the landlord to figure that out, I appreciate it. Right. For item 3, which are the properties on West 104th, and item 5, the properties on Gramercy Place, I'm denying the petition for relief from moratorium. Those are cases RSQ 1904420 and RSQ 1904422. The petitioner, for both of these items, the petitioner may increase rents on both of the units on each of the properties as allowed by the ordinance, 3% in October 2019. And you may just need to start increasing 3% every year, Mr. Branch. For items 2, 3, 4, and 5, my findings will be issued within 20 calendar days. County Council, have I missed anything?
I do not believe so, Madam Hearing Officer.
With that, then, items 2, 3, 4, and 5 are concluded. I have no cards for public speakers, for public comment. So with that, then, the Department of Consumer and Business Affairs hearing officer is adjourned to 10 a.m. Thursday, August 22nd, 2019. Thank you, everybody.